Good morning, MMTs. We've had such a wonderful morning today, and the thing about it is in the U.S. indices, we were calling for a market correction. It's on the home page. We put it out last night, and we also put it out last week. Earnings are winding down, but one of the things that we're really going to get into is I'm going to go into the Dow Jones Composite. I've got a distribution underway in the Dow Jones here. And it's a mixed bag, but this is what happens at market tops. If you'd like to learn more about market tops, just visit stockmarketfunding.com on the home page. Mr. Brian Plain, senior technical analyst, has all of those indexes there for you to see and give you transparency. One of the other things that we wanted to look at was the Dow Jones equity REITs today. We're starting to see what we call a sector rotation reversal in a lot of indexes. And as far as the sector indices, let's get to hopping over here. Let's get to making some money on these reversals. Yesterday we did have a big reversal. This is called the Stanley Consumer Index. And these are the kind of names that were overbought, and these are the kind of names. You got some, remember, earnings are still out and whatnot, but you got some distribution going in there. The cyclicals, look at the cyclicals again, the CYC.X index. There's distribution there. So I just want people to know when we are putting in market tops, we look at what it's not like the big money sells everything every day. Let's take a look at the Philly Semiconductor Index. They have rotations from day to day when they're taking profits at market tops, and we've already made that clear, everyone. And it's time for everyone to get a grip to look for the shorting opportunities. The technology index, when we look at the CBO technology right here, we can see that it's not collapsing. We can see that there are certain names that are getting little pops, but the upside remains limited. We've been talking about that, so, and it's happening. It's really happening. Let's take a look at the transports again. Let's take a look at the airline sector. Let's see how they're faring. There are going to be some shorts in here. Okay, we're winding down the earnings season. Dow Jones Transportations. Once again, the transportations are not leading the way. Once again, the NASDAQ transportations, that's the real broad-based one. We can see some pretty good haircuts in here. So the thing about the haircut is profit taking. Let's just put it that way. We are due for that again. And not only that, let's take a look at the computer technology today. That's the XCI.X. So we're looking in here. Earnings season's winding down. It's midpoint of the year. It's perfect time. Here's the CTN.X technology index called the Credit Suisse First Boston. We can see that distribution is underway. There's still lots of great opportunities. We still have a lot of earnings coming out, but we're winding down. There's going to be little to keep the markets going higher, everyone. And we, listen, here's the North America Telecom Index we've been watching. Okay? These are some of the big high flyers in here that reported some earnings. AMX is getting a little bit of a haircut. The other things that we want to take a look at is the Interactive Week Internet Index called the IIX.X. Last time we had a reversal, they came down, and then we came back up and made higher highs, like we said.
Below Delta LINE 72.7.
Once again, it's looking for the opportunity. Remember, that stockmarketfunding.com has clearly said in February we were right. The evidence is there. The correctness is there. We have been talking about the correction, and it's here. We updated it last night. Individual names have been selling off. You got price lines that are down $20 off your high. You've had a slight Apple reversal over the last couple of days. It can't maintain a close above yet, 350. So here's Broadcom. This is this index. Akamine is in here, but there's distribution there. So the Morgan Stanley Internet Index has got the Apples, the Amazons, the Baidu. What a great short on this Baidu. And it's had another intraday. And what a great short on CRM. What a great short. that these stocks were overbought. They had to come down. That's where the investors love to get trapped, at market tops. The Morgan Stanley Technology Index, it's a mixed bag, and most of these companies reported good earnings. IBM is still sitting right around that 170.58, had a good earnings report. It doesn't matter, it's overbought. No one's saying that they're bad companies and the earnings are bad. They're overbought. What part of overbought don't you understand? What part of overbought do you need to learn? What part of this whole market top cycle, if you were an investor that didn't know anything, what would you do and how would you do it? They never know when to sell. Here, the GSTI Software Index had a great move, great earnings in a lot of these names. But I'm sorry, there's distribution there. Okay? Once again, the walk around Wall Street. Let's take a look at the GSTI hardware. These are hardware stocks. Apple's classified in there, EMC, Hewlett Packard, IBM. All good names. They've done well. RIM was downgraded today, just so you know. So in these sectors, you got to know exactly where they're at. Let's take a look at the disk drives. What's wrong with taking a haircut in these disk drives? NTAP, that's one's overbought. SanDisk, Seagate, they all reported fairly decent earnings, don't get me wrong. So what? That's come and gone. Now we have to deal with overbought capacity levels that need to correct. When they correct, they'll be very good stocks to trade off the bottom. Let's go ahead and take a look at the Morgan Stanley Healthcare Index. HMOs. I have to pay high healthcare. I need to make money on these things to help pay for that. Let's take a look at the Casino Gaming Index. It's a mixed bag. Some of these are overbought, some aren't. LVS, what a great trade that we featured in pre-market today. WYNN, what a nice reversal there. Their little parties are over because they're so overbought, just like they were in 2007. Let's take a look at the gold and silver. Gold and silver's been pulling back for the last couple of days. Hedge fund managers, institutional managers, they've been dropping, selling is what I'm referring to. The CRX.X commodity related equipment. Great names in here. But guess what? I'm sorry. It's time to sell short and make profit. Distribution again. Distribution again. What about the natural gas stocks? How about some distribution? They bid them all up going into the mid-year. Hey, earnings were great. Let's take a look at the oil patch here. All of the great names that all of your pundits tell you to buy at the top. These are short sells. We market correction. When they're done correcting, they'll be buying opportunities. Deutsche Bank Energy, all nothing but red. Good names, but they're great shorting opportunities. They're overbought. They've been bid up. They're overbought. On a weekly and a monthly, they must come down. Oil services, they're overbought. They must come down. They're overbought on a weekly and a monthly. So guess what? If you're an investor, better learn how to pull the trigger. Oil services, all red. Why? Because we like having fun. When these things go down, we make money. They're overbought. They're overbought on a weekly and monthly. Distribution. S&P Banking Index, they tried to come in and walk the dog on some of these. They're not worth nothing. They're overbought. Corrections happen. Security brokers and dealers, everything has got pizza sauce on it. It's all red. Why? They've had great moves. Time to sell. Sell short, make the money. Oh, how about your lovely little fertilizers that have been walked up for 17,000 years straight up to the tops? Everyone's crowded in these trades. Got to be a pullback, and here it comes. But now the key is, MMTs, once we get these pullbacks in this correction, which we have barely gotten into it, the restaurant stock has still got some exuberance in here. They reported good earnings across the board for the most part, but once again, I'm sorry, they have to come down. Once again, they're overbought on a weekly and monthly. Is that hard to understand? So if you were one of the lucky ones that got into some of these, you got to know when to sell. People don't like to sell because they're greedy. And when they correct and they don't sell, as far as I'm concerned, they deserve the punishment. Because there's a time to buy, there's a time to sell, and then there's time to buy again. Do not let irrational exuberance and greed and all of these other kinds of things get in the way of you being very proactive. And let's take a look at the Morgan Stanley cyclical again. I just want to show you that Caterpillar, great company, it's got to pull back before there's buying opportunities. The Rail, CSX, same thing. Good stocks that just get too overbought need to pull back. When they do, we're going to cherry pick the good ones. Sears Holdings got crushed yesterday on an earnings report. X Steel, all of these stocks right here, they're under distribution. The Morgan Stanley retail consumer area, once again, I just wanted to show it one more time. We're going to cherry pick. They're overbought. They got to come down. And there's nothing wrong with making profits in a correction. Okay? The housing sector that everybody keeps trying to buy, nah, stay away from this. There's nothing that has any evidence about the housing market being at the bottom. Okay? The one that we will look at, though, is when some of the miners pull back. There's going to be some pretty good buying opportunities after they do their correction. Okay? In some of these names here. So, the biotechnology index of Morgan Stanley Biotech, let's take a look and see. It's populating now. Look at that. Here's all the big biotechers in here. We like biotech. However, they get overbought. They got to come down too. That Standard & Poor component, the S&P 100, I'm overbought. Those are the 100 stocks. They bid them up. There's shorts in here every place. Every place. Every place is red. Look at the distribution. S&P 500. You must listen. You must listen to the distribution. You must watch. They're overbought, folks. Look. The S&P 500 is just overbought. The names reported good earnings. They're overbought on a weekly, monthly. That's how corrections happen, Mr. Investor. If you don't know it, you better get to learning it. Take control of your life. Take control of your destiny. Understand knowing when to sell into strength.
-3/4 Delta.
Whole Foods is going to be a good one after the close. S&P mid-cap. Mid-cap is populating. The mid-cap selling off. Got overbought. They led the rally up. Mid-cap, small-cap, they performed well. But you're at another second correction of 2011. We called the February one. Now we're calling one here. Okay? And from being overbought to extreme overbought is where these names come back down. And let's take a look at the S&P small cap, which we like. There'll be good opportunities in here if things work out right economically. They led the way. We always love small cap stocks. They lead the way if they're doing well, but there's all distribution. Just like we said in February, Mr. Investor, guess what? Learn how to take profits. Do yourself a favor. Okay? Now, for a market maker trader, for all the MMTs and some of our bigger clients, they're selling into it because they're overbought. They got to come back down, create another buying opportunity. So there are lots of risk management tools that you can learn. The small cap right here. That's SML.X. So that's really a walk around Wall Street. We did some of the bigger, heavily weighted ones, and we're going to be doing a lot more around it. I will show the 52-week low list, which is diminished. It's not, you know, these, I'm just showing that. The 52-week high, new 52-week high list is where we look at selling these overbought stocks. They've outperformed the market. They've done well. Earnings were well in a lot of these names. The thing about it is, Mr. Investor, they have to come down when they get overbought. Okay? So basically, when we take a look at some of these intraday low counts, you can see the low count. MCP is the leader. Ha ha. 72.50. Look at this. Look at all of these overbought stocks and all of these sectors combined on the intraday low count, where the hedge fund managers and the institutional managers are selling off. How about it? SMF, We called it well ahead of time. We warned people. We got people selling short. New MMTs are learning. Bloated stocks that were great stocks, ExxonMobil. It doesn't matter. There's no buying opportunity. Distribution is underway. On the other hand, let's look at some, and this is all New York Stock Exchange. So there was some good news outside of the distribution where stocks are doing their earnings and people are still trying to buy on the, this is called an intraday high count list, everybody. So basically there's some good news and some good moves to the upside and there's distribution to the downside. Percent losers right here. You want to see percent losers? I'll show you. Look at that. All of these overbought stocks, they're all getting nothing but sold, Mr. Investor, because they're overbought and an irrational exuberance. But people never learn. What they will do is when these corrections start, this one isn't going to collapse, but it's going to pull back before there's buying opportunities. I can tell you one thing, this is how they start. They start with nothing but red. And I can tell you right now on that NYSE where 60% of the program trading is being done is nothing but getting whacked on the percent losers. You must understand. But then there's some bright news on percent gainers. We've got some percent gainers that are still on the good side. So you got a very diversified. This list will get more overbought because we're still tracking some of the earnings. So we'll look at shorting that list and some of the good ones on the percent losers that have had a short-term haircut. We'll look at how to get net long only on the leadership. That's the end of Walk Around Wall Street.